And one of the big indicators in the last slide that Adrian ended on there was the SOG rule. And that looks at two things, which is the employment rate and the interest rate. So when interest rates go up, plateau and start coming down, and unemployment starts to go up, that is what the SOG rule is, and it's already been triggered. So we're basically at the end of the second quarter now when the SOG rule was triggered. And so what that generally meant is that the recession is either happening or about to happen. And the unemployment rates that are happening in the US and Canada specifically, because our economies are so vitally linked, despite Trio trying to destroy everything, is that has a big effect on people's purchasing power, right? So like I said, that if you don't have the money to go and purchase things in the economy aren't bought. That means people or companies are reducing their production capacity, they're laying people off, and it's basically a downward spiral. That's what happens in recessions. And when I was younger, when I looked into history, right, the Depression of 1929 happened. It just didn't really make a lot of sense to me. How could you have all of this activity and then all of a sudden, boom, and now it's turned off because nobody had any money? Where did this money go? Right? The money was still there somewhere. It was in somebody's pocket. But if you were buying things on margin and you lost 1,000% of whatever you invested or whatever, poof, it's gone. Right? So where does this actual economic activity have it? Right? And so for most of human history, that's been very close to the bottom of society. 80-90% of people were farmers, right? So as long as you had food growing, you could survive, and you could trade this food and get enough money so you could do a couple things of bringing in the secondary. So what this is really showing us is that the financialized, superfluous, esoteric, outside value, luxury items, a lot of that stuff has been built to cater to the middle class, and the middle class is getting absolutely destroyed right now for a variety of reasons, not least of which increasing taxes, not least of which the recession, layoffs, right? Because the biggest asset that almost everybody has is their job, right? That's your cash flow. That's what keeps you alive and keeps you going and allows you the mindset to be, hey, I can go purchase something, right? Which is why our economy continues to increase, because we're always printing money, we're always putting stuff into the economy, we're always buying stuff, we're always making stuff, we're always selling stuff, right? So I'll put a cap enough for now. You have something to say, Adrian?
Where the hell that money going in the 30s is the same place where that money is going in today. Most of that money wound up in the stock market, where investors were buying leveraged pools, and then leveraged pools were buying leveraged pools. So it was just the financialization of printed money. So all that money did not go into productivity, into production.